Two Dow components take the topic focus this Wall Street Confidential, Coca-Cola and Altria. We should maybe invest in these two stocks.
Partners, these were two stocks that were trapped by the strike, as I like to call the expiration. Altria, there were so many people selling the October call, the October 70 call, that they jammed the stock down. The way that works, just so people understand it, is if you own the October 70 call and you see the stock not moving, you want to sell it in order to be able to take some money out of it. If you seal that selling, it pays to buy the common stock and then sell that call against it with the idea that then you lock in a nice gain. All of that pressure plus selling the October 70 put made it so that the stock gravitated to 70. It shouldn't have. This was a breakout quarter for Altria. We had seen bad domestic, bad international. We finally saw a turn in international, and that's very significant for that stock. There will be a very big buyback announced before year end. They haven't been able to buy back stock for multiple years. Altria is a great place to go on both a dividend play and on earnings play, and also, by the way, on the breakup. Coca-Cola is a little different. Coca-Cola had shown some very weak markets in the Philippines, Nigeria, Japan, and India. Now, Nigeria is still questionable, but Philippines, Japan, and India turned very big. Also, domestic has been just horrible for as many years as anyone can remember. The mineral water acquisition, the Glaceau, added 1% of growth to Coca-Cola. Coca-Cola and Altria are both majority overseas, so that you get the translation of the dollar. And most importantly, I think people have to understand that when you read an article, say, about Spanish housing or European housing and how they've now caught our flu, people do not sell stocks because of this flu. They sell certain stocks and then buy other stocks. There's a grave misperception. I see it all the time, whether it be on TV, web, print, which is that the market is bad, so therefore sell. The market is bad because of American housing and subprime. No, the market doesn't. The money doesn't leave. The money's all dedicated to equities. It just finds other equities. And I guess what I'm saying is that Coke and Altria stand out as the other equities that people should gravitate to.
Can I ask you Coke versus Pepsi? Is that
Pepsi is 60, arguably 62-3% domestic, so therefore it doesn't get the weak dollar. Pepsi has different raw costs. Coca-Cola's raw costs have declined dramatically because they, in particular, don't have wheat. They don't have grain, so to speak. Obviously, they have some sugar, but they also have a lot of diet things, and they have water. I would tell you that Coca-Cola is exactly the opposite of Pepsi right now. Pepsi is struggling, although they don't admit that they're struggling. Coca-Cola is on fire.
All right, Altria and Coke, they're it. Thanks a lot, Jim Cramer on Wall Street Confidential.